the Vanguard Total Stock Market ETF, VTI. The fund represents 100% of the investable USA stock market, including companies of all sizes, large, middle, small, and even micro. This ETF was established in 2001 and has returned 8.58% per year since then. For the past 10 years, the return has been 12% annually. I will later compare all of the ETFs in a spreadsheet for the sake of clarity, but you can see how that closely tracks the S&P. The beta and the standard deviation stand at 1.02 and 16% respectively. This shows that the fund is a little more volatile than the S&P. The fees are as low as they can be at 0.03%, typical for the Vanguard ETFs. Unfortunately for all the investors from the European Union, there isn't a direct equivalent tracking the index behind VTI. However, by the end of the video, you will see this isn't such of an issue. Looking at the top 10 companies, they are the same as the ones in the S&P 500, which is normal since both ETFs are market capitalization weighted, meaning that the biggest companies will be at the top. However, their weight is about 4% less, standing at 28%. The obvious reason for that is that VTI includes a lot more companies, over 3,700 currently, and so part of the percentage goes to middle and smaller stocks. When it comes to the sectors, the picture is similar. Technology leads with almost 29%, while healthcare and financials follow with over 12%. This is just a part of my video about investing in the so-called market. To watch the full version, click on the video that should have appeared on your screen.